the impact on margins, Nitish, and was it largely due to investments made? Because I was looking at it, 13.5 in Q1 versus 19.3. Was it because of investments made? Does it kind of start evening out, or do you reckon this is the number that you would likely maintain for the rest of the year?
I think for FY23, we are very clear. Our guidance is 12 to 13% in terms of EBITDA margins. Our thinking here is that we need to continue to drive market leadership and do everything, especially in the esports space where we already are market leaders, double down and invest as much as we can so that we can continue or increase the lead that we have over any potential competition. And therefore, there have been multi-pronged investments that we have been making, and we will continue to make. Our only fine line is we don't want to power this by burning a lot of cash. We don't like losses, and we don't want to power any growth that is driven by losses. But as long as we're able to generate profitable growth, I think focusing on margins right now would be completely the wrong thing to do for the business from the mid to long-term perspective. And that's the discipline we are maintaining.
So you maintain this 12-13% EBITDA margin guidance, and is that the growth numbers that have come in quarter one, is that symptomatic of what could happen for the rest of the year quarterly as well?
It should. If you see our esports business, the second half of the year is usually much stronger than the first half. And even the Q1, if you see, has grown over Q4, whereas normally because of seasonality, etc., Q3 and Q4 are much larger. So I think it's a very positive trend to see Q1 in absolute terms be larger than Q4, which has not been the situation earlier. So that shows that the health of that business is very good, and it's powering up very well. But even from an overall Nazara perspective, I think this year should be a good growth year for us.